Reinsurance Business recently had the pleasure of being on the ground at the 2025 Bermuda Risk Summit, where we caught up with reinsurance and insurance executives to hear their perspectives on the vital questions facing the industry today. In this episode of Reinsurance Business TV, we ask,
what are your clients or partners most worried about today?
I've been with Builter for 11 months, and what I've spent most of my time on, and I think is one of the biggest concerns for the community, is this balance between a robust regulatory environment and stifling innovation. And so I think that I've spent a lot of my time helping to strike that balance, or helping to communicate with the regulatory environment, with standard setters, to ensure that that balance is created. Because when you create an environment that is so strict or overly an over-regulation, if you will, it will stifle innovation. And then it does not help with solving problems. It doesn't help with companies being able to provide solutions. And so I think that there's been a big concern over probably the last couple of years that we may be moving in the wrong direction or too far from a regulatory perspective, and it'll start to inhibit companies' ability to offer the products that are necessary to serve the community that they were essentially formed to serve.
I think in many ways, this sort of tectonic shift that I'm talking about is something that, more enlightened corporate leaders and boards have considered as a possibility for a very long time, but it was only a possibility. And now what we're seeing is that it's playing out in real time on their watch, right? And so the issue is that, for the last 80 years, there's a system that's been essentially in place, right, that I described earlier. But at the end of the day, one of the key externalities of that was a world which was most benign and most kind of conducive to the development of the multinational corporation. If we are shifting to a different system, is it going to be still as emollient an atmosphere for the multinational corporation? And the problem is that because this system has essentially prevailed throughout the post-war era, it's been refined, obviously, it's evolved over time, but the essential guardrails of it and the principles behind it have been in place for a long time, means that no corporate leader, no board, no investor, no regulator, no government leader, nobody's ever gone through this before. So these leaders, they are flying the proverbial plane while they're trying to build it at the same time. They don't have the guidance of previous generations of management to guide. And even when you think about the pre-war era and going back into the 19th century, where the conditions that we seem to be moving toward are prevailing. I mean, global trade as a percentage of global GDP was a much lower number, right? I mean, the entire conditions of the global economy were very, very different. So what's really concerning to them is, I think, to get to your question, is that there is no crystal ball, or let's just say there's no clarity on exactly where we're going to get to. And so, it's trying to continue to have a set of objectives and a North Star, if you will, that's guiding your strategic behavior. But you're constantly looking at, on a much more frequent basis now, and looking at the data points that are coming in fast and furious, as we discussed. And the question is, are you assessing those data points correctly, right? Are they confirming the narrative that you're building to base your strategic decisions on, or do they deviate from that? And you need to think about it. Go back to the climate change analogy, right? I mean, that the world has been getting warmer every single year, yada yada yada. But just because we had a very cold day in New York last week, you need to study that. But that doesn't really deviate from the overall trend, right? So this is, and you don't have a whole lot to benchmark that against. I think that's really the challenge. And I think some companies are very, very good at questioning whether the seemingly impossible or the thing that makes no economic sense will happen. And I think, corporations need to appreciate that political actors, whether they be national leaders or individual voters, take actions against their economic interests every single day. And you need to be prepared for those for those outcomes, perhaps in a way you hadn't had to in the past?
I would say that the areas they're most focused on are holistic risk management strategies. So, which these strategies would allow them to protect their investments, and also it would allow them to deploy capital in the most effective and efficient manner. Managing these political and economic uncertainties is essential in pursuing strategic growth across various industries and jurisdictions, which is essential in the ever more challenging environment and the quest for capital optimization. Clients need to mitigate these novel risks, whether they be economic, legal, regulatory, to protect their global operations and pursue not only their cross-border, but also their domestic growth strategies.
We've 20-something carriers in London market and some in Bermuda here as well. But we see, I guess is the FOMO effect is probably the biggest thing, is fear of missing out on AI. That's really, it's the boards of the insurance companies are directing their heads of claims, the heads of underwriting to really push AI now. So there's kind of a panic from that aspect. But it's, in the London market, we're doing some proofs of concept with some carriers at the moment in terms of AI. But from our perspective, it's the data has to be right from that. So that's probably one thing. The second thing what we see with our clients is coming back to data is Blueprint 2 in London is actually changing the plumbing, as we call it, from the legacy 40-year-old systems onto the new cloud-based digitization systems. By getting that right, you're building the foundation for AI in the future as well, and getting the data models right. We also see pressure on our carriers for efficiencies. Say stuff like bringing in straight through processing, one touch on data as well, coming right through. So carriers are looking for efficiencies as well, and kind of like then obviously talent as well. So they're the kind of challenges we're seeing across the market. It's the same. Bermuda is the very same here, from that aspect.
Yeah, I think the themes are fairly similar. So, our clients, as we're in both the insurance and reinsurance business, so our clients and partners are quite varied, right? We have insurance clients. We have clients that are program managers that have our paper. All of our brokers are clients and partners. We have reinsurance clients who are insurance companies. So when you ask what they're worried about, they're worried about some of the same things and some different things, right? So I think the protection gap, if you will, is something that I think people are worried about. But that protection gap is interesting because when you talk protection gap, it's often protection gap between risk and insurance company, right? Uncovered risk. And I think the whole public-private partnership and how public-private partnerships work is really important. We've got, and that's going to be a continued topic. So I think there's a whole focus on the public-private partnership and how public-private partnerships work. And in the U.S., it's state by state. So I think that is a worry for people, or certainly a topic of conversation. But there is that gap between insurance and reinsurance as well, that protection gap, if you will. And that is another thing that our insurance clients, right? So that we talked about customer to insurance company, then we have insurance clients. Insurance clients think a lot about, and the brokers think a lot about that protection gap. Where are people willing to price and sell risk versus what do they have to pay for that risk, and can the cost of that be passed through to the ultimate customer? So that whole chain is something that people are worried about. And I think Nicholas did a good job talking about this on the panel yesterday. It's typically about price, right? Reinsurers are capital in the business of allocating capital at a price and adequate return on capital. So that whole conversation of, can you charge a price that is an acceptable price for the risk that can then be managed and passed through is something that clients and brokers, all of the clients and brokers are worried about. I think coverage and coverage terms and conditions is another thing that is that is something that all of our clients and producers are constantly talking about, because that also drives price and risk, right? You can price a product, and then you can also have the coverages and terms, et cetera. So that's a big topic. And then I think we touched on data and technology. I think that it's a very complicated topic, right? Staying ahead of data, staying ahead of technology. How do you gain the insights? Who has data and technology advantages? I think Aon just announced last week $1 billion investment in, I think they called it the data arms race. Hopefully I'm not wrong on that, but I think there is a data and technology race across the industry. And I think there's a lot of thought leadership going into how do you harness data? How do you use data? How do you ensure that you have feedback on all the data that you're getting, right? Because getting data is only good if you actually can do something with it and gain insights in terms of the products that you're offering and how you price those products. I think those are just those are the things that people are focused on and worried about. And then, we obviously touched on, you wake up every day to a different global topic, and you're trying to navigate a global industry of global product. Some, you don't know the cost of goods sold for a long time. So some it's quicker to know the cost of goods sold, but even the things that you think the cost of goods sold that are quick, those inputs can be changing relatively quickly now. So I think there's a lot of thought being given to how do you navigate the global economy right now.
So worried's a big word, but I think one of the things that they may be worried about, or often are worried about, is the successful implementation of the IT projects that they're undergoing right now. So U.S. insurers, in large part, are operating on older, outdated systems that are challenging to upkeep, and have actually presented a real challenge for them in terms of keeping up with the market demands around product evolution and pricing evolution and underwriting. And so this has been a challenge for companies over the past 5 to 10 years, and every company is at a little bit of a different spot within their life cycle. But part of what happened over the past few years when the market hardened very, very rapidly is companies that did not have updated IT infrastructure found themselves a little bit exposed when there came a need to evolve their products around deductibles and coverage forms and pricing. So companies that were operating on an outdated system had a much more difficult time moving as quickly as they needed to as we moved into a little more of the hard market portion of the cycle, primarily driven by changes in reinsurance, but then ultimately needing to kind of flow the impact of those changes through to their primary policyholders. So I think there's some worry around their ability to successfully implement these large-scale IT projects on time and on budget. I think from a focus perspective, maybe not a worry, but a focus perspective, there's a tremendous amount of inertia around artificial intelligence. And so two words that have been kind of buzzing their way through the industry quite a bit over the past few years. And we're seeing a lot of focus on this from the C-suite of our clients. And I think the conversation is maturing greatly. So before it was, how do we think about artificial intelligence potentially replacing people or replacing people's roles? And now the conversation is evolving to, how do we use AI to help empower our employees to do more of what we need them to do and less of perhaps what they're spending their time on unnecessarily. The conversation is evolving around talent and how you think about hiring the proper technology resources to support your artificial intelligence journey, how you think about data and governance, and then also how you think about the customer experience. So I've been doing this for a while, and there's been a lot of prognosticators that have thought about disruptors to the insurance industry. And one of the things that artificial intelligence stands to do is it allows insurance companies to think about those potential disruptor threats and use AI to get ahead of those. And I think customer experience is an area of keen focus for a number of insurers today.
Yeah, I think there's a few things spring to mind of things like compliance and regulatory requirements. So there's certainly more and more of regulation that's coming out, and the need to be able to comply with that. So again, that leads very nicely to the data story. They need to have the information to be able to comply with what they're being asked for. We're also seeing an increasing number of CAT events. Of course, the appalling California wildfires recently and the impact that had. So things like that are not a sort of once in a lifetime event. They're quite unusual, but we're seeing more of them. So the ability to have that underlying data to understand what's happening, why it's happening, how we can prevent it. Again, a great comment from the panel yesterday was really not just about pricing correctly, but actually seeing how you can reduce the risk by advising how homeowners, for example, can improve the resilience of their homes against things like wildfires to offer more competitive pricing. So there's a lot that can be done with the data, and it's not just the risk information, but also as the claims come through to see exactly why they're occurring and what you can do about it.